What's the difference between inflation that we really are being told by the media and being told by the main players that inflation is this one thing, that is prices are going up because of a war in Russia or because of a flu or because of global supply chains, versus the real issue of inflation of the money printer going brr?
Yeah. Actually, shout out to Max Kaiser who retweeted my explanation of inflation. And I guess so many people are just like, whoa, wait a second. This is such common sense, right? A lot of economics is just common sense because it's based on incentives. You put yourself in that position, you say, well, what would I do? And then whenever you're incentivized to do, it's pretty much common sense. You're going to do what's best for you. And that creates a positive feedback loop. So when it comes to inflation, here's the first problem, the definition of inflation, right? Because the government says inflation is a general rise in prices. But the free market says, wait a second, inflation is a general rise in prices because the creation of more currency units, stealing the purchasing power of all existing currency units, is making prices go up. So there's that core difference of what the government says versus what the free market says. And that's where the trust element comes in. But if we had inflation the way the government says that we have inflation, we would actually be cheering on higher prices because the cure for higher prices is higher prices. What do you mean by that, CJ? Think about this from the side of production. It's funny how people think of it from investing in retail, but they very rarely do they come from the producer side of things. When the prices are going up, just like if the price of Bitcoin was going up, but the cost of production was relatively constant, what happens? You become more profitable. Well, when you become more profitable in any other asset besides Bitcoin, you can increase the supply. And what happens is when you start to increase your supply, you lower your marginal cost of production. And what I mean by that is if let's say you're a company that makes water bottles, it's much cheaper to produce 1 million water bottles. It's cheaper per water bottle to produce 1 million water bottles than it is to produce 100,000 water bottles. See, so if you're making a lot of profit off of selling those 100,000 water bottles, you take that profit, you reinvest it to produce more supply because you have that demand there for it. And that allows you to lower your marginal cost of production. Well, when you lower your marginal cost of production and then you sell it back to the market, you can actually start to lower prices because it's not about selling it for a higher price. It's about selling more units. Producers make money by producing more units and selling more units, not necessarily by higher prices. So if we had the inflation that the government was saying today, we'd be like, go higher prices, go higher. Because as they went higher, producers would be able to expand their supply. And as they expanded their supply, it would lower their marginal cost of production. And as it lowered that cost, they would actually be able to lower the front end prices. And when they lower those prices against the consistent supply demand, they can actually sell more units, right? The lower the price, they're going to increase demand and sell more units. So they would actually be profitable. And we would see GDP, not only in the United States, but all around the world, growing at a rate that would be unbelievable. We would never see the type of GDP growth that we would have in the last couple of years if the economy were the reason for the percentage rise in prices we've seen from 2020 until now. GDP would be through the roof. Instead, we're not seeing that. We're seeing that when you account for GDP with proper inflation, right? Because one thing about calculating GDP is that you need to know what the inflation rate is. So when you use the government CPI as a GDP deflator, you come out with an inaccurate GDP because the CPI is wrong. So when the CPI is double what it is today, roughly speaking, here in the United States, and then you apply a CPI that's double the rate of the official number, and you plug it into GDP, you can find that the economy is shrinking. And that's how we have stagflation. That's why prices are going up and the economy is going down. And there's only one way for prices to go up when the economy is shrinking, and that's through the dilution of currency, inflation. So that's the big misunderstanding about inflation that we have today. The government has one narrative that people are trusting in, and the free market has the reality of what's happening. And people are starting to discern between those two different narratives. And it becomes common sense that, well, wait a second. If I'm working more hours and I'm making more money, but I'm buying less stuff, this isn't making sense. If there's more production and more consumption, there should actually be an increase in production, but we're not seeing that. We're not seeing an increase in production to match the growth of prices. So, and I feel really bad for the people who don't understand this, because they're keeping their dollars in the bank, they're keeping their fiat currencies in the bank, and like you said, they're holding through this dilutionary process, and they don't even understand that the culprit is real inflation. It's the creation of all those new currency units, stealing that purchasing power from them. Bitcoin doesn't allow anybody to just create Bitcoins. There's a cost to creating Bitcoins. I mean, the United States, JP Morgan said that it could cost up to $2 trillion. This new Fed funding program could create $2 trillion of new liquidity. Well, that $2 trillion was created through the signing of a law that Congress didn't even vote on. And it was just created like that. There was no cost. There was no proof of work. It didn't matter. It was just created. When it was created, it didn't magically have value. It sucked all its value from everything else. And that's the lie that they're telling about inflation. They want to blame it on you. They want to blame it on me. You're too successful. Yeah, but if we were that successful, then we wouldn't be in stagflation, because the economy would be growing and there'd be more production and consumption. So we literally cannot be experiencing their definition of inflation, because the reality is showing us that prices are increasing at a significant clip, but the economy, even according to their numbers, is stagnant, right? So real GDP with real CPI is negative, but even with their fake numbers, GDP is basically level. It's basically equal. It's not growing anywhere. There's a little bit of fluctuation quarter to quarter, but there's not significant growth. There would be required significant growth to cause the type of inflation in the prices that we're seeing, if their definition of inflation was truly inflation. But the reality proves otherwise.